Okay. Secretary of the branch, CA Prashant Kumar. Learned speaker of today's session, CA G.V.N.Hari garu. Senior members of the profession, respected past chairman, members of the managing committee, my dear professional colleagues. A very good evening to you all and welcome you all to this direct taxes SHASHTOTSAV, a week-long webinars on direct taxes. And today's webinar on the topic, interpretation and understanding of income tax law. We, the members of Visakhapatnam branch, convey our heartfelt thanks to the speaker, CA G.V.N.Hari garu, for immediately accepting our request to address the members of Visakhapatnam branch. In fact, he is always accessible and says okay to the branch and members of our Visakhapatnam branch whenever we approach him for his time. No enactment has been enacted by the legislature for interpretation of statute, including on tax laws. However, in many acts, definition clause is inserted to mean a word or expression. Explanation and provisos are inserted to expand and or curtail. No codified rules have been made by the rule-making authority or the legislature. Rules are judge-made, keeping due regard of the objects, intent, and purpose of the enacted provision. Interpretation is the primary function of a court of law. The court interprets the provision whenever a challenge is thrown before it. The expression, interpretation, and construction are generally understood as synonyms, even though jurisprudentially both are distinct or different. Interpretation means the art of finding out of true sense of the enactment, whereas construction means drawing conclusions on the documents based on its language, phrases, clauses, terms, and conditions. Rules for interpretation of tax laws are to some extent different than the general principles of interpretation of common law. Rules of interpretation which govern the tax laws are being dealt in the series of articles by many publishers. Every enactment normally contains short title, long title, preamble, marginal notes, headings of a group of sections or individual sections, definition of interpretation clauses, provisos, illustrations, exceptions, and saving clauses, explanations, schedules, punctuations, etc. Title may be short or long. Preamble contains the main object. Marginal notes are given chapters and headings are group of sections. Central Board of Direct Taxes issues circulars explaining each clause. Finance Minister in his speech refers to the proposed insertions, amendments, alterations, modifications, etc. It is highly desirable to go through such material apart from unmodified provision for proper understanding, pleadings, and arguments. There are many technical words and phrases in the tax law to understand, like what is charging and machinery provision, interpretations of double taxation avoidance agreements, explanation and proviso, retrospective, prospective or retroactive, may or shall, and mandatory or directory, rule of consistency, estoppel, same words in different statutes, literal interpretation, doctrine of ejusdem generis, mutatis mutandis, and as if, approbate and reprobate, legal fiction, deeming provision, harmonious construction, ratio descendi, discretion, so on and so forth. To enlighten about many other issues involved, we have eminent speaker with us today, CA G.V.N.Hari garu. Let us gain thorough knowledge with his deliberations on this topic. Now I request CA Andavarapu Sridhar to introduce the speaker of today's webinar, CA G.V.N.Hari garu.
Good evening, everybody. Welcome to the Direct Taxes SHASHTOTSAV refreshing week-long seminars. I am privileged to introduce the speaker, Sri G.V.N.Hari garu. Sri G.V.N.Hari garu born in 1967 in Guntur, and his parents are Sri G. Panduranga Vittal and Srimati Umadev garu. He was married to G. Purnima garu and blessed with a daughter named Divya, and she has completed her MBBS. G.V.N.Hari garu is an advocate practicing in the specialized area of tax litigations. He secured first rank in state in humanities in Board of Intermediate Education and qualified as chartered accountant in the year 1987 at a very young age of 20 years. He is also a qualified chartered accountant in the year 1994. He carried on the profession of the chartered accountancy from the year 1998 to 2012. Later on, he enrolled as an advocate in October 2012 and since then practicing as an advocate concentrating on the appeals under the Income Tax Act. He is having experience of more than 20 years in representing the tax appeals before various authorities. Since his enrollment as an advocate, he has been representing the tax matters even before the High Court. He is retained from various public sector undertakings such as RINL Visakhapatnam, Hindustan Shipyard Limited Visakhapatnam, DCA Dredging Corporation of India Visakhapatnam, and Visakhapatnam Port Trust. Apart from the above professional activities, he has presented various papers on the matters related to audit, taxation at various seminars organized across the state of Andhra Pradesh. With these few words, I introduce the speaker to the August gallery. Thank you, sir.
Now I request Speaker
Thank you.
Hari Garu to take up the session, sir.
Chairman of the branch, Sri S. Murali Krishna, Secretary, Mr. Prashant, C.A. Prashant. I have seen a few past presidents, past chairman attending the seminar. It's very good to see past chairman attending the seminars. My professional colleagues, I consider it always a privilege and I deem it a pleasure to share my knowledge with the professional brethren, and particularly when it comes to my home chapter, Visakhapatnam. Actually, I got a very advanced intimation of more than 2 weeks. So I was very confident that I could prepare myself in this period of 2 weeks. But for some reason or the other, I could not find time. Though it is not an excuse, but my preparation started only yesterday for a few hours, and luckily today bench got cancelled. So I could spend more time today till afternoon for preparing this notes of mine. So that is one reason why I could not give any formal PowerPoint presentation that can be stored by the members after this address is completed. But in any case, I think the meeting is getting recorded. So from the archives, this can be accessed. This notes is only a rough notes which I have prepared to help myself to make this presentation. So there may be so many grammatical mistakes or other issues in these notes. So excuse me for that. I would like to drop one more caveat that my focus while preparing this notes has been to explain with the aid of some decided case law. To put it the other way, they are the best examples for us. Therefore, those cases have been picked up by me, wherefrom I can explain a few things about the interpretation of the Income Tax Act. But the subject, the core subject contained in the specific case laws may not be of much relevance today, because these are all old decisions, and in many cases there have been amendments brought into the act subsequently, and in some cases the section itself might have been repealed. With this brief introduction, I would like to start my presentation. In fact, our chairman has already given you a bird's eye view of the topic. In fact, there are certain issues which he has touched upon, and these issues I could not cover in my presentation due to lack of time. In any case, when a situation, when a appropriate situation arises or the occasion arises, we can discuss if time permits. Now, how to read and interpret Income Tax Act? Now, before that, when it comes to reading any act, we should first look at certain important things. These are long title, short title, extent, and commencement. Long title also gives us a clue when it comes to understanding the provisions of the act. But here, the long title does not convey much meaning because the Income Tax Act was already in existence. There was Income Tax Act 1922. And now this is Income Tax Act 1961. So what they say is it is an act to consolidate and amend the law relating to income tax and super tax. So there were two separate legislations, income tax and super tax. Both the things were consolidated and one new law was framed. That is the short title of which is Income Tax Act 1961. But nevertheless, even this long title also helps us in a particular sense. Some of the provisions of Income Tax Act 1961 are identical to that of Income Tax Act 1922, except that the number of the section got changed. So there was a lot of litigation already with regard to Income Tax Act 1922, and the matters have reached the apex court. And whatever decisions have been rendered in the context of Income Tax Act 1922, they are equally applicable to Income Tax Act 1961, wherever the provision is identically worded. So to this extent, this long title also helps us in understanding the provisions of the Act. So if you have any doubt with regard to a particular provision, how to read it, first thing you have to do is you have to find out whether there was any similar provision or identical provision under the Income Tax Act 1922. If there was any such provision, then you can further look into whether there was any legal decision rendered with regard to that particular section. And if you can locate one, then you can blindly apply that particular decision to the facts of your case and take an appropriate decision. So that way, the long title also helps us. Now, when it comes to short title, extent, and commencement, the most important aspect we have to look into is when from the act comes into force, and the other one is what is the jurisdiction of the act. Here the act extends to the whole of India, and it comes into force on the first day of April 1962. That's all we can gather from the short title, extent, and commencement. Now, Income Tax Act means not only the legislation, pure legislation, but there are certain other things which are also to be considered when we try to understand the provisions of the Act. Therefore, I have listed out the relevant components of the income tax law. One is the Act itself. The other one is Income Tax Rules 1962. Then Finance Act. Every year, it's an annual exercise. We get one Finance Act. So we have to, in fact, the rates of taxation are given only in the Finance Act. So we have to pick up the rates of taxation only from Finance Act. And sometimes when there is an emergency, when the Parliament is not functioning, the President may come out with some ordinance which will be later regularized. So the ordinances also we have to take into consideration. And the Central Board of Direct Taxes keeps on issuing circulars and notifications from time to time. So the circulars and notifications also we have to keep in consideration. And last but not the least, what the courts have to say while interpreting the provisions of the Act matters the most. Whenever there is a gray area, whenever the provisions are not clear and there is ambiguity in the provisions of the Act. Now, as far as Income Tax Act itself is concerned, there are 298 sections, 23 chapters, and there are 14 schedules. So you have to have at least a bird's eye view of what are all the schedules and what are the headings of each one of the 23 chapters. And at least you should read once the heading of each section. There is an index to the Income Tax Act. So it may not be possible for us to read all 298 sections. We keep reading the sections only as and when the situation arises. But I recommend that you have at least an idea of what is the arrangement of these sections. And if at all you have a problem and you have to look for a solution by reading the Act, then where you have to lay your hands. So at least for this purpose, you should have a clear idea of what are all these 298 sections and how they are placed in the Act. Now the provisions of the Income Tax Act are classified, can be classified into the following categories. The provisions can be broadly divided into definition provisions, charging provisions, computation provisions, exemptions and deductions, missionary provisions, penal provisions, and appeal provisions. This classification is important because when we apply the rules of interpretation or rules of construction of a statute, the provision which we are trying to interpret, it falls into which category assumes a lot of significance. Based on the nature of the provision you are trying to interpret, you have to go for that particular interpretation. So in that context, the classification of the provisions is very, very important. Now, when it comes to a particular section, it will have three components. One is the main section itself. Then we have a provision and then an explanation. Many of you may be aware, but still I would like to briefly explain what is a provision and what is an explanation. A provision always carves out an exception to the main section. Suppose the main section says, in so and so circumstances, subject to fulfillment of so and so conditions, a particular deduction or exemption is to be given. Then what the provision normally contains is, what are those situations where the exemption or deduction will not be granted? So it's an exception to the main section. Likewise, a particular section may contain a provision relating to subjecting the SSC to some tax liability. Then provision there means it provides for such certain situations where that particular tax liability will not be attracted in the case of the SSC. So to put it in simple words, a provision always contains an exception to the main section. Then explanation. It only tries to further explain the meaning of the main section. That is the main purpose of an explanation inserted to any particular section of the Act. Now, having seen the broad classification of the provisions of the Act, I would like to take up now one after the other, starting with definition provisions. Now, definition provisions, you find them in section 2 of the Income Tax Act, and again in separate chapters of the Income Tax Act. For example, some of the items are defined, some of the words are defined in the head of income, salaries. Some are defined in the head of income, income from house property, likewise, so on and so forth. Now, the rule you have to keep in mind is, when a definition is placed in a specific chapter of the Act, then that definition applies only to that specific chapter. You cannot extend that definition to the other chapters of the Income Tax Act. Whereas the definition contained in section 2 of the Act, they cut across the whole Income Tax Act. So that means wherever this word appears, you can safely use the definition you can, as given in section 2 of the Act, unless in the specific chapter any attempt is made to deviate from this particular definition. Just for the sake of example, you have the definition of immobile property in section 269(u)(a) of the Income Tax Act. I have just kept in bold letters. You can see the length of the definition. There is no need to even read it. Then you see definition of immobile property in section 194(ia). Now, this is a very short definition, whereas the other one is a very lengthy definition. Now, depending upon the context, this particular definition has to be used. If you are using it for the purpose of section 194(ia), then it means simply land or any building or part of a building. Whereas for the purpose of section 269(u)(a) of the Act, then it includes so many things. Land or building or any part of building is to be transferred together with any machinery, plant, furniture, fitting or other fittings, such machinery, plant, furniture, fittings or other things also. So, whereas this extended definition is not there in 194(ia) of the Act. So, this bifurcation or this distinction is of lot of importance when it comes to deciding whether in a particular case you have to deduct tax at source or not. Then another important thing that we have to notice from the definition provisions is, these are basically two types of definitions that we find in the Income Tax Act. One are known as inclusive definitions and one are exclusive definitions. Inclusive definition can be identified because it starts whenever we find the word includes. Say inclusive definition starts with the word includes, whereas an exclusive definition normally starts with the word means. The examples also are there. Section 2, subsection 24, income includes. Likewise, 2, subsection 12(a), books or books of account include. Whereas section 2, subsection 1, agricultural income means. Section 214, capital asset means. Now, what is the basic purport of this differentiation? Inclusive definition and exclusive definition. Inclusive definition, when the word used is includes, what is mentioned therein or the items mentioned therein are only an illustrative list. It is not an exhaustive list. So if there is any other item which can address that particular classification and which is similar in nature, then even those items, even if they are not listed in the definition, they have to be considered as part of that particular definition. Whereas when it comes to an exclusive definition, the list given to us is exhaustive. That means if a particular item, you have to decide whether it falls within the particular definition or not, you have to just tick each and every item of the list. If you don't find it anywhere in the list, that means that particular definition is not applicable to this particular item. So that is the context in which this bifurcation of definitions into inclusive definitions and exclusive definitions helps us while reading the Act. Now, sometimes what happens is that you may find or you may come across a particular word, but that particular word is not defined anywhere in the Act, either in section 2 or in the relevant chapter. Now then you have to necessarily go for alternative sources. The alternative sources are normally the meaning of the term as per normal trade practice. So in the normal trade practice, how that particular word is understood. From there, you can pick up the meaning of that particular word and you can apply that for in the context of the Income Tax Act. Now, one small example I am sharing here in this regard. That is the case of Aspinwall and Company versus CIT. Citation is also there. The word manufacture has not been defined in the Act. So therefore, the SSE was plucking and receiving raw coffee berries, makes it undergo 9 processes to give it the shape of coffee beans. Now the case of the SSE is that he is manufacturing coffee. Whereas the case of the department is, it does not amount to manufacture, simply he is doing some manual processes and therefore there is no significant change in the product. The case of the SSE is that the new product is absolutely different and separate from the input. Now, how to decide this particular case? So therefore, manufacture has to be given a meaning as it is understood in common parlance. It is to be understood as meaning the production of articles for use from raw or prepared materials by giving such materials new forms, qualities, or combinations, whether by hand, labor, or machines. If the change made in the article results in a new and different article, then it would amount to manufacturing activity. This is the normal definition of a manufacturing, of the word manufacturing in the normal trade practice. So this definition was adopted for the purpose of Income Tax Act, and the case was examined in the light of this particular definition, and a conclusion was reached that the raw coffee berries are completely distinct and different from the coffee beans that we bring home. Normally we get coffee powder, but coffee powder comes after grinding the coffee beans. So normally coffee means we refer only to the beans. We don't know what are the berries. So it is only the earlier form of the coffee beans that we see. So therefore, commercially, both are two different things. So therefore, there is a change in the product when compared to the raw material. So therefore, the Supreme Court held that this is a case of manufacturing. Then sometimes if that particular word is not available even in, not used normally in trade parlance also, then you may have to go for sometimes general dictionary meaning also. Then definition used in another act can also be taken as a reference point sometimes. Normally the rule applicable there is the other act which you are trying to apply here should be more or less having a similar object, because same object you cannot have two different. Then only the definition contained in another act can be taken into account. Now here is one more illustration with regard to the definition which is not provided in the Income Tax Act. That is the case of Oxford University Press, etc. versus CAT. Here the section taken into consideration is section 10, section 22 of the Income Tax Act. Any income of a university or other educational institution existing solely for educational purposes and not for purposes of profit. Now these sections have been renumbered. They're all forming part of section 1023 capital C of the Income Tax Act. Now, what this Oxford University Press does in India is they only publish books and they sell books. The issue is whether the profit from sale of the textbooks, which are normally useful for education purposes, whether the income from such activity can be considered as income from educational purposes, and thereby whether they are eligible for exemption under section 10, subsection 22 of the Act or not. Now, one of the objections raised by the assessing officer while granting this particular exemption is that the word used is income of a university or other educational institution. So therefore, there was a definition of university in the University Grants Commission Act. So what it says is a university established or incorporated by or under a central act or a provincial act or a state act. Therefore, a conclusion is drawn that it has to be necessarily an university, an Indian university. Whereas Oxford University, we all know it is not an Indian university, it's a foreign university. So therefore, his objection is this university cannot be granted exemption under section 1022 of the Act. The Honorable Supreme Court has said, though the word university is defined in the University Grants Commission Act, we cannot adopt such definition from that particular act because, first of all, the objective is completely different. Another interesting observation they have made is there is income of a university or other educational institution also. Now, for other educational institution, it is not by virtue of any statute. So that means the other educational institution can have its operations anywhere in the world. So if that be the case, why the restriction shall be applied only to a university? Within the same section, you cannot have two different types of restrictions for the two different terms used in a particular section. Applying this logic, they said that the meaning as given in the University Grants Commission Act cannot be imported into the Income Tax Act for the purpose of analyzing this particular section. It's a completely different matter that the exemption not allowed even by the Supreme Court. They said that there is no education here. It is only simply printing and sale of textbooks. It cannot be considered as equal to an educational institution existing solely for educational purposes. So therefore, they held exemption cannot be given. Now coming to charging provisions. As per Article 265 of the Indian Constitution, no tax shall be levied or collected except by authority of law. This is the basic principle. Now, based on this, the charging provisions are construed or interpreted. Therefore, the charging provisions are to be strictly construed. So what does it mean? If there is no charging provision in the Act, that means there is a provision, every head of income has a charging provision, but if the particular transaction does not address the various elements or components of that particular charging section, then the charging section fails, and therefore you cannot subject that particular income to tax. This is what is called as strict construction of the provision. Now, to have a better idea of this particular issue, I have picked up one illustration. That is the case of Ajax Products Limited. A brief introduction of the past or earlier provisions may be required to appreciate this particular case law. Now we have the concept of block of assets. So the concept of claiming depreciation and concept of claiming, computing capital gains, they are completely different from the previous provisions. So therefore, I will take 2 minutes to explain. When there is a depreciable asset, each asset is separately accounted. Each asset is separately accounted, and depreciation is claimed separately for each asset. Now, when an occasion comes that you are selling that particular asset, there are two components: the sale proceeds and the written down value and the cost of the asset. There are three components. Now, the excess of sale proceeds over and above the cost of the asset, they will be subject to tax as capital gains. But the excess of the excess between the sale price and the return on value, excluding the difference between sale price and the cost, that means the depreciation originally allowed, which has brought down the cost to a particular return on value. This will be now subjected to tax. Now, in this context, there was a situation whether such taxable event arises when the assets are sold, depreciable assets are sold at the time of winding up of the business. So this is the issue. Now what happened? This issue traveled up to the Supreme Court, and they have laid out certain principles. They said 3 conditions are to be fulfilled. During the entire previous year or a part of it, the business shall have been carried on by the SSC. The machinery shall have been used in the business, and the machinery shall have been sold when the business was being carried on and not for the purpose of closing down or winding it up. All the 3 conditions have to be fulfilled. Then only that particular income will be subjected to tax. Now an amendment has been made to nullify this particular decision. A provision has been inserted in the Act. Now, if you carefully observe this particular provision, what it says is, provided further that where the amount for which any such buildings, machinery or plant is sold, whether during the continuance of the business or after the cessation thereof, exceeds the return on value, so much of the excess as does not exceed the difference between original cost and return on value shall be deemed to be the profit of the previous year in which the sale takes place. The computation part I have already explained, so there is no need to explain the computation part. The conditions are important. The condition here is whether during the continuance of the business or after cessation thereof. Now, if you carefully see the condition number 3 laid down by judicial pronouncement is the machinery shall have been sold when the business was being carried on and not for the purpose of closing it down or winding it up. Now, the proviso addresses that particular situation. They have now said whether during continuance of business or after the cessation thereof. So that means this condition number 3 is no more applicable because the law is amended by virtue of insertion of a proviso. But the issue is, there is one more thing. During the entire previous year or part of it, the business shall have been carried on by the SSC. In this particular year, it so happened that the SSC did not carry on any business during any part of the year. So therefore, the case of the department is, once the words have been used, whether during the continuance of the business or after the cessation thereof, then the other condition is to be implied. There is no need of mentioning that particular condition separately, that SSC should have carried on some business during the particular previous year. But this is where the Supreme Court clearly said, it is a charging provision. You are charging a particular income to tax. So therefore, the provision has to be strictly construed. Now, when the Supreme Court has laid out 3 separate conditions, nothing prevented the department or the parliament to have included that particular situation also in the proviso. Since there is a deliberate omission to address that particular condition, nothing can be read into the act, and they held that the income cannot be subjected to tax. So to put it in other words, the subject is not to be taxed unless the charging provision clearly imposes the obligation. This is the principle. And they said, if the amendment was not there, the present case is directly covered by the earlier decisions, as the plant and machinery were not used during the accounting year and were sold only after the cessation of the business. Now, I shall take up the computation provisions. Now, the most difficult part of Income Tax Act is only the computation provision actually. A charging provision normally gives us a few conditions, XYZ conditions. If those conditions are invoked, then the chargeability arises. So therefore, most of the occasions, there won't be much difficulty in understanding a charging provision. But the problem comes with regard to computation provisions. If you carefully observe the case laws, most of the decisions, a majority of the decisions would be addressing the issues relating to computation of income under the relevant chapters. But the act is designed in such a way that there is a charging provision and there are computation provisions. For example, section 45 of the Income Tax Act specifies the chargeability of capital gains. If the conditions specified in section 45 are fulfilled, then the capital gain liability arises. But how the capital gain is to be computed, those are all provided in section 48, which is a computation provision. Why this distinction is important? It is because the principle is that if the computation prescribed in the computation provision fails for any reason, such income cannot be taxed, even if there is a charging provision. No, it is a continuation of the earlier principle. Charging provision is to be strictly construed. So what does it mean? If there is no, if a particular transaction does not fall within the chargeability section, then that transaction cannot be subjected to tax. This is the basic principle. Now, here is a situation, one hurdle is crossed by the department. That means the chargeability provision is applicable to the SSC, but the computation provision fails. Now let us try to understand what does it mean when it can be said that a computation provision fails. The classic case in this regard is CIT versus BC Srinivas City, 128 ITR 294. This is with regard to transfer of goodwill. Why I have dropped a caveat is now there is an amendment in the act. There are, section 55 of the Income Tax Act is amended to include this particular situation. So therefore, this case law is no more relevant today as far as the subject, core subject is concerned. But as far as interpretation issue is concerned, this principle still holds good. Now there was a case of self-generated goodwill. Now goodwill is a capital asset. There cannot be two opinions on that. Now whenever there is a transfer of a capital asset, section 45 can be invoked and the profit or profit arising from that particular transaction can be subjected to tax. But what does the computation provision say? If you go to section 48, you will start with the full value of the sale consideration. And from there, you have to give deduction first for cost of acquisition, then cost of improvement. Now, what is the cost of acquisition of a self-generated goodwill? Nobody can determine. Nobody can say with accuracy as to, because so many factors go into the development of a goodwill or building up of a goodwill. Need not necessarily on account of some money spent in the early years. So therefore, it is impossible, in fact, to ascertain the cost of acquisition of a self-generated goodwill. So therefore, the computation provision, you are stuck up. You cannot proceed further with the computation. You can start the calculation starting with full value of sale consideration. Then comes less cost of acquisition. How much? You are not able to fill up that particular element. So that means the computation provision has failed. Now, when the computation provision fails, the chargeability section also cannot be invoked. So therefore, that particular transaction cannot be subjected to taxation. So the observations of the Supreme Court are the charging section and the computation provisions together constitute an integrated code. When there is a case to which the computation provisions cannot apply at all, it is evident that such a case was not intended to fall within the charging section. So that is what the Supreme Court said. It must be borne in mind that legislative intent is presumed to run uniformly throughout the entire conspectus of provisions pertaining to each head of income. Now there is another case. This also relates to capital gains only. Introduction of a capital asset as a capital contribution by one of the partners. Now there is section 45(3) to address this particular situation, but this decision was rendered before such amendment was brought into the act. Same principle was applied, saying that the cost of acquisition is known here, but the full value of consideration is not known, because the value of the asset that is brought into the books of account, it undergoes changes from time to time, because once it is thrown into the partnership form, it becomes the common interest for every partner in that particular property. So the specific interest of a particular partner cannot be identified. So therefore they said the consideration cannot be measured, and therefore the computation provision fails. Now another interesting case is CIT versus General Industrial Society. It's a Calcutta High Court decision. They have adopted this particular principle that to a situation. The issue is there was a case of a particular SSE who has obtained one manufacturing license to set up one white cement plant. They wanted to manufacture white cement, but they did not set up their business, and this manufacturing license was sold. So now the issue is whether sale proceeds of manufacturing license can be subjected to taxation or not. Now, a manufacturing license in a way is a capital asset, but because of the principle which I have already explained, since the cost of a manufacturing license cannot be separately identified, so there is no way it can be subjected to tax under the head capital gains. So therefore, the department has made an attempt to bring it to tax under the head profits and gains of business or profession, where 28 subclause 4 says the value of any benefit or perquisite, whether convertible into money or not, arising from business or the exercise of a profession. So according to them, this license, manufacturing license, is a benefit or perquisite which has arisen from the business. And since now there is a value for that, which was realized by the businessman, and it could be sold and some sale proceeds were received, the sale proceeds can be subjected to tax invoking section 28 subclause 4 of the Act. What the Supreme Court said is, the Calcutta High Court said is, the license was not an outcome of the business carried on by the SS. It was in no way connected with the business carried on by the SS. On the other hand, this license was obtained for the purpose of setting up of altogether a new business in respect of an item not covered within the business of the SS. Therefore, the benefit arising out of the said license would not be said to be a benefit. So therefore, the section 28(4), all the conditions are not applicable here. So therefore, they said that particular section cannot be applied. Another important aspect they said is, once a particular income is chargeable under one head, and if it cannot be computed and charged under that head, it cannot be charged under a different head or as income from other sources. A subject cannot be taxed unless the charging provision clearly imposes the obligation. So this principle was reiterated by the Calcutta High Court. Now, we have covered definition provisions, charging provisions, and computation provisions. Now, there are provisions which grant certain exemptions or deductions to the taxpayer. These are normally beneficial in nature because the gross total income gets reduced, and sometimes the gross total income is computed, and thereafter these amounts are allowed as a deduction while computing the net total income that can be subjected to tax. So the basic principle while interpreting the exemption and deduction provisions is, since they are beneficial in nature, they are to be construed liberally. But that does not mean, even if the basic conditions are not fulfilled, the SSE will be getting the benefit of the exemption or deduction. The liberal approach would be only with reference to the procedural aspects to be fulfilled. This is the basic issue. Now, earlier, there was a case before the Supreme Court in the case of Bajaj Tempo Limited. The issue or the section that for consideration was section 15C of the Income Tax Act. Profits and gains derived from an industrial undertaking, as does not exceed 6% per annum on the capital employed in the undertaking. This is the extent to which the SSE will get the deduction. But this section applies to any industrial undertaking which is not formed by splitting, reconstruction of a business already in existence, or by the transfer to a new business of building, machinery, or plant previously used in any other business. So one of the conditions is not formed by transfer to a new business of building, plant, or machinery previously used in any other business. So that means for the purpose of this particular industrial undertaking, if you are purchasing some building or machinery or plant which has already been used for the purpose of a business activity by some other concern, some other SSE, then this particular industrial undertaking will not be considered as eligible for the purpose of deduction. Now, it so happened in this particular case that a very nominal amount, a marginal sum of 3,500 rupees was utilized by the company for purchasing tools and implements which were transferred to it from the previous firm. Earlier there was a firm, now a new company was started. From the previous firm, these implements and tools worth of 3,500 were transferred. So therefore, immediately the case of the assessing officer is, because of the proviso to the, because of the subsection 2 of the 15C, the condition is not fulfilled. Or rather, the restrictive condition is applicable here. The restrictive condition is that industrial undertaking will not be eligible for the deduction if there is transfer to the new business of building, machinery, or plant previously used in any other business. Now, if you go for a literal interpretation of this particular section, then the SSE has to necessarily be considered as ineligible for the grant of this particular deduction. But the Supreme Court, what it says is, initial exercise therefore should be to find out if the undertaking was a new one. So what are the basic conditions? It should be a new industrial undertaking. Here it is a company newly formed. So they said once this test is satisfied, clause 1 should be applied reasonably and liberally in keeping with the spirit of 15C of the Act. So here the basic condition that it should be a new industrial undertaking was fulfilled. Now, while doing so, various situations may arise. For instance, the formation may be without anything to do with any earlier business. That is, the undertaking may be formed without splitting up or reconstructing any existing business, or without transfer of any building material or plant of any previous. This is absolutely no problem because condition is not attracted, restrictive condition. Such an undertaking undoubtedly would be eligible. On the other extreme may be an undertaking new in its form, but not in substance. That means earlier some deductions were claimed by a partnership firm. Now a company is formed, all the assets of the earlier partnership firm are now transferred to this particular company. It's only a tax planning device. So therefore, such undertaking would be obviously not entitled to the benefit. In between the two, there may be various other situations. Difficulty arises only in such cases. For instance, a new company may be formed, as in this case, a fact which could not be disputed even by the ITO. But tools and implements worth 3,500 were transferred. Technically speaking, it was transfer of material used in a previous business. One could say, as was vehemently argued by the learned counsel for the department, that where the language of the statute was clear, there was no scope for interpretation. If the submission is accepted, then once it is found that the material used in the undertaking was of a previous business, there was an end of the inquiry and SSC was precluded from claiming any benefit. The words of a statute are undoubtedly the best guide. But if their meaning gets clouded, then the courts are required to clear the haze. Subsection 2 advances the objective of subsection 1 by including in it every undertaking except if it is covered by clause 1, for which it is necessary that it should not be formed by transfer of building or machinery. The restriction arises not by transfer of building to the new company, but that it should not be formed by such transfer. This is the most important distinction that has been brought out by the Honorable Supreme Court to liberally interpret the section. Liberal interpretation does not mean that the section will be completely given a go by, and just because the Supreme Court or High Court feels that it is a fit case, I mean it's a on moral grounds or ethical grounds, this deduction has to be given. So therefore, on a liberal approach, we are granting this deduction. Such an order cannot be written. You have to confine yourself to the provisions of the Act. Any court of law has to go by reading the provisions of the Act only. So the most important point they have picked up is it should not be formed by transfer of building or machinery. Here, majority of the equipment, building, everything is new. Only a very, very nominal amount of 3,500 rupees in the form of tools and implements. That too because those tools and implements, they were not available, and those are very key elements without which they cannot carry on the manufacturing process. Therefore, they have taken from the previous form. So therefore, they said the formation is not by transfer. This is the key to the interpretation. Therefore, it is not every transfer of building or material, but the one which can be held to have resulted in formation of the undertaking. This is how they have liberally interpreted the particular section, section 15C, and they said the deduction can be allowed. So the principle they have laid out is the core condition, the core provision is that there should be a new industrial undertaking, some capital employed for the purpose of new industrial undertaking, and then the 6% of that will be allowed as a deduction while computing the profit. So this condition, when it is fulfilled, while reading the other conditions imposed by the very same section, if there is any ambiguous situation arises, then considering the facts of the case, a liberal approach can be adopted by the court of law. Now, the other case is Gwalior Rayon Silk Manufacturing Company Limited. Here, the issue was whether roads were part of the building for the purpose of allowing the depreciation or not. So, again, because depreciation is an allowance, a benefit given to the SSC, and when a factory is constructed, you have to use the road also when you have to access the building. So considering this approach, they said roads are also eligible for depreciation. Then there is a recent case rendered in the context of Central Customs Act, Dilip Kumar and Company. This is now widely invoked in the department when it comes to some small violation of conditions by the SSCs with regard to exemption provisions or deduction provisions. Here, the issue was one vitamin E50 powder was imported. Normally, when that type of powder is imported, the rate of duty would have been 30%. But what SSC says is, this powder is used by me for the purpose of preparing the animal feed. So therefore, it's an ingredient of animal feed, and therefore the rate applicable is 5%. So this was the issue that has given rise to this particular controversy. Now, there was earlier one case where some beneficial interpretation was given by the Supreme Court. They said the principle laid out by that particular court is completely different, and therefore the said principle cannot be applied to the facts of this particular case. So they said the question before the court in the earlier case was whether a person claiming exemption is required to comply with the procedure strictly to avail the benefit. As I have already explained, when it comes to main conditions, it would be strict approach only. Only when it comes to some procedural aspects, the liberal approach will be made available. The question posed and decided was indeed different. The said decision, which we have already discussed, Supra, however, indicates that while considering an exemption notification, the court has to distinguish the conditions which require strict compliance, the non-compliance of which would render the SSC ineligible to claim exemption, and those which require substantial compliance to be entitled for exemption. We are pointing out this aspect to dispel any doubt that the legal position as explored in this decision. So what they are trying to say is this particular decision is not in conflict with the earlier decisions. So now what they are saying is, in a situation where there is any ambiguity in an exemption notification or exemption clause, in which event the benefit of such ambiguity cannot be extended to the SSC by applying the principles that an obscure under ambiguity or doubtful fiscal statute must receive a construction favoring the SSC. Now, this broad principle laid out here is somewhat coming in the way for SSCs, but in the summary, they have again actually laid out that exemption notification should be interpreted strictly. The burden of proving the applicability would be on SSC to show this that his case comes within the parameters of exemption. When there is ambiguity in exemption notification, which is subject to strict interpretation, the benefit cannot be claimed by the subject SSC, and it must be interpreted in favor of the revenue. So the burden of proof is only with regard to the basic condition. If the basic condition is fulfilled, then this decision cannot be applied, is my personal view. Now, there are some provisions which are known as missionary provisions. These are provisions relating to filing of return of income or assessment, revision. These are all known as missionary provisions. Then penal provisions. These provisions are related to charge of penalty, and penalty is considered as a quasi-criminal in nature, and therefore it is also to be strictly construed when it comes to the power of assessing officer to levy any penalty. But always certain exceptions are provided, in which cases the relevant penalty won't be applicable. So those exceptions are in situations that are favorable to the SSC. So therefore, when it comes to exceptions to charge of penalty, in most of the cases, it is in the form of a reasonable cause. Then these provisions are to be construed liberally. So the same provision, one segment is considered very strictly. That is whether the particular penalty provision can be invoked or not. It has to be strictly construed. Even if there is a little ambiguity also, then the penalty cannot be invoked and the particular penalty cannot be levied. But once the penalty provision is applicable, now when it comes to certain exceptions laid out in that particular provision, the liberal approach has to be made and the SSC shall get the benefit of doubt. Now appeal provisions are also normally construed liberally. This is broadly the classification of the provisions of the Act and the normal way in which the general principles adopted while interpreting these various types of provisions. Now, having said that, now let us come to the specific rules of interpretation. Now, before I proceed further with this notes I have prepared, one thing I would like to say is reading of the section is the most important thing. You should carefully read the section. While reading so, you should not leave even a single word. All the words used in the particular section are relevant. Each word has a significance. It cannot be assumed that a particular word was used unnecessarily, and therefore that particular section can be read even without that particular word. So therefore, every word of the section has to be read. Then another principle is you cannot add any words to the particular section. What is clearly visible to your naked eyes, only those words you have to read. You cannot import words into a particular section to your convenience. Even if you feel that actually that word ought to have been there, but probably it was a omission. Even then, you cannot insert that particular word for the purpose of reading the section. And then when you are reading a particular section and the words therein, you have to keep in mind always the context in which the particular word is used, and also the overall frame of the Act into which this and the place where this particular section fits into. These are the most important and broad principles we have to always keep in mind while reading a particular section. Now, to explain this, some of the illustrations I have picked up, and let us go through them. First one is the case of Punjab Civil Supplies Corporation. This is a full bench of Punjab and Haryana High Court. Now, section 263 is the present section. This was the old section, but the provisions are similar. The commissioner can revise an order within a particular time limit. Now the issue was, the matter was already subjected to appeal. So therefore, the commissioner cannot invoke the revisionary powers. That was the basic issue. Now, the point is only to matters that have been considered and decided in the appeal, the revisionary power does not extend. If the matter is not considered and decided, and it is not the subject matter of the appeal already preferred against a particular order, to that extent, the revisionary powers can be exercised by the commissioner. So while inserting this particular clarification, they have made this amendment on 1/6/1988, and they said filed on or before or after the first day of June 1988. So that means this particular clarification will be applicable to any appeal filed on or before or after the first day of June 1988. Nothing is left out actually. So that means if there is any pending matter, then this particular amendment can be taken into consideration while deciding the scope of the powers of the commissioner. But the SSC argued that if the appeal was already filed and they decided before the first day of June 1988, then this particular clause cannot be applied. The court said that there are no such exceptions provided in this particular provision. So you cannot read certain words into the statute, and therefore the provision has to be read as it is. All the words used by the legislature have to be given their due meaning and effect, and no surplusages in the language employed is to be imputed to it. You cannot impute any surplusage to the particular section. So now here it is a case of depreciation, initial depreciation. It is an extra depreciation. Normal depreciation will be in any case allowed, but in the year of acquisition, initial depreciation, that is extra depreciation, is allowed. So therefore, the issue here is that initial depreciation was to be allowed only where it was for generation of electricity or power. Here the SSC no doubt purchased a generator, but it was not for the purpose of generating power and selling. It was for the purpose of generation of electricity, for the purpose of manufacturing its own products. That means it is a captive consumption on the part of the SSC. So therefore, it was held that the actual section that is used in the act is new machinery or plant installed for purpose of business of generation or distribution of electricity or any other form of power. New machinery or plant installed for purposes of business of generation or distribution of electricity or any other form. Business of generation or distribution of electricity is different. Captive consumption of power is completely different. So these words for the purpose of business of generation, if you remove the word business of business, and if you read it as for purposes of generation or distribution of electricity, the case would be very clear for the SSC. He would have got it, he would have got the depreciation. So therefore, he wanted to read it without those two words, of and business. But it is not possible. Each word was purposefully used in the act, and therefore, each word has to be given its meaning. You cannot exclude or ignore some of the words used in the act and read it to your convenience. This is what was the principle laid out, and it was held that the SSC is not eligible for the initial depreciation. It is a well-established rule of interpretation that every word of a statute has to be assumed to have been deliberately and consciously incorporated therein by the legislature, and has thus to be given a meaning and effect. Courts are therefore enjoined to avoid such interpretation as would leave any part of the provision enacted without effect. So this is a very important principle. You have to keep it in mind. Now another principle laid out in the case of Kerala State Cooperative Marketing Federation Limited, any expression in any enactment will, like chameleon, acquire color in the background in which it is situated. Tried to say that a word acquires meaning only with reference to the text and context. So this is the important principle. Why this issue has come up is because SSC is a cooperative society and claimed exemption under ATP 2A3 of the Act in respect of profits earned by it out of the purchases made from the member societies. The SSC, which is an apex society, purchased cashew from the primary cooperative societies who are its members. The total purchases made by it were to the extent of rupees so and so, out of which the purchases from member societies was in a sum of rupees so and so. The claim for exemption of this amount was made on the basis that it marketed agricultural produce of its members. The accused rejected the claim. Now, what does the section say? Section says the marketing of the agricultural produce of its member. Here, the society sold the cashew. That means it is a case of marketing. Cashew, that is an agricultural produce. The cooperative societies, the PSCs from which the member societies from which the produce was purchased, they are all members of the society. Therefore, all the conditions are fulfilled. Here, the issue was the use of this word of marketing of agricultural produce of its member. So what does it mean? Is it produce of its member, or even if the member purchases it from somebody else, will it also be a produce of its member? So they said, they refer to a Delhi High Court decision where the expression of occurring in the relevant provision, the use of the expression in the context, setting of the different categories of societies in the legislation in comparison with other provision thereof would indicate that expression of acquires the meaning as belonging to. So any expression in any enactment will, like chameleon, acquire color in the background in which it is situated. Right to say that a word acquires meaning only with reference to the text and context. So of means belonging to. So once the person has purchased that particular produce, it belonged to him. And that person is your member. You have taken from him. So therefore, the provision has to be interpreted favorably and the deduction has to be given. Then another important principle, the provisions have to be read by taking literal meaning of the words used, so long as the provisions are clear and unambiguous. Equity is stranger to taxation. Therefore, one cannot go by the intention of lawmakers. This principle we will come across at a later stage. And causes omissions. As I have already mentioned, if there is a word not used in the particular section, you cannot import that word into the statute. It is an omission according to you, but that does not mean you are entitled to substitute or import or add that particular word also into the section and read it to your advantage. The insertion of any extra word can be done only by legislative exercise. The act has to be amended and that word has to be specifically inserted in the act by virtue of an amendment. Then only that is possible, but you cannot add any word. This issue was considered in Tarulata Sham case. It is the case of a deemed dividend. So a deemed dividend, the provision will be applicable where payment is made by a company by way of advance or loan to a shareholder. Here the situation is an advance was given to the specified person only, all other conditions were fulfilled. It so happened that that particular person has repaid the amount. So as such, there was no closing balance outstanding as on 31st March. So the contention of the SSC is you are computing my income for the previous year, which is chargeable to tax in the relevant assessment year. Now, when you see the previous year as a whole, there is no loan outstanding, no advance outstanding. So therefore, I have not used the profits of the company for my advantage. Therefore, the deemed dividend provisions cannot be invoked. But is there any such exception in the Act section? There is no such exception. It simply says payment by a company by way of advance or loan to a shareholder. It does not say that outstanding as on 31st March. So therefore, you cannot import any word or add any word to the section, and therefore the contention of the SSC has to necessarily fail. That is what the Supreme Court has said. His arguments, if accepted, will certainly soften the rigor of this extremely drastic provision and bring it more in conformity with logic and equity. But the language of Section 2(6)(e) is clear and unambiguous. There is no scope for importing into the statute words which are not there. Such importation would be not to construe but to amend the statute. Even if there be a casus omissus, the defect can be remedied only by legislation and not by judicial interpretation. This is, but such things can be done. Such things can be done that only extraordinary circumstances. And here the principle which I have told was discussed again. In a taxing act, one has to look merely at what is clearly said. There is no room for any intendment. There is no equity about tax. There is no presumption as to tax. Nothing is to be read in. Nothing is to be implied. One can only look fairly at the language used. Once it is shown that the case of the SSC comes within the letter of the law, he must be taxed, however great the hardship may appear to the judicial mind to be. Now another case, Padma Sundar Rao. This was a case of validity of a notification reissued under the Acquisition Act. This is the only occasion where I have departed from the case laws under the Income Tax Act. To the best of my possibility, I have confined myself only to the Income Tax Act. Here the issue was whether a particular notification initially issued, subsequently quashed by the High Court, then reissued, whether the reissue also should be within the time limit originally specified or whether it is covered by the exception in the Act. The exception was here in the form of an explanation. What it says is, in computing any of the periods referred to in the first proviso, the period during which any action or proceeding to be taken in pursuance of the notification issued under Section 4, subsection 1, is paid by an order of a court shall be excluded. So there was an exception carved out in the Act itself. The notification can be reissued, and while reissuing, for the purpose of computing the period of limitation, the time taken or time elapsed during the period when there was a stay order of a court shall be excluded. To this extent, there was an exception in the Act. But the case is different here. The case is the notification was quashed. It is not case of a stay granted by the court. So even when a notification is quashed, then also the notification can be issued by adding up this time period lost is the case of the government. But it was said that it cannot be so. So here it is very important. Two principles of construction, one relating to casus omissus and the other in regard to reading the statute as a whole, appear to be well settled. Under the first principle, a casus omissus cannot be supplied by the court except in the case of clear necessity and when reason for it is found in the four corners of the statute itself. But at the same time, a casus omissus should not be readily inferred, and for that purpose, all the parts of a statute or section must be construed together, and every clause of a section should be construed and with reference to and other clauses thereof, so that the construction to be put on a particular provision makes a consistent enactment of the whole statute. This would be more so if literal construction of a particular clause leads manifestly absurd or anomalous results which could not have been intended by the legislature. Where to apply words literally would defeat the obvious intention of the legislation and produce a wholly unreasonable result. We must do some violence to the words. and so achieve that obvious intention and produce a rational construction. So it's a very, very extraordinary situation where a causes omissus can be supplied by the court, that too only by a court. Now here comes the extended concept of reading down a provision. Now, as we have seen earlier, the section has to be read as it is. You cannot add any words, and you have to take all the words as per the context in which it is used. Now, sometimes it may produce disastrous results. In such situations, in a very highly exceptional situations only, the concept of reading down a provision can be invoked by the court. There are two examples that I have taken up in this particular to explain this particular concept of reading down a provision, though in fact it is mostly an exercise on the part of the court. You cannot read down a provision, however soothing it may be to you, however relief may be consequentially available to you because of that particular way of reading. It is highly dangerous to assume that your way of reading a particular section will be later on approved by a court of law. So for the sake of practice, better not to use this particular principle. But it's a very important principle when you really find that a particular section is not fulfilling the desired objective, then certainly the grievance can be highlighted, and then only the resolution will come from some court of law. So at least to pick up such instances, the previous case laws may help us. So for that limited purpose, I have made this as a part of my discussion. Now the first case is that of CST versus Radha Krishna. So here is a case where under the CST Sales Tax Act, the SSE did not pay his dues. Now the Commissioner of Sales Tax has two options. One is to levy penalty for the default, and the other one is to launch prosecution. Now, in this particular case, what the Commissioner has done, he has not invoked the penalty provisions, he has invoked the prosecution provision. So the issue was whether he can invoke the prosecution provision when there is a provision to invoke the when an option to exercise the penalty provision. You all know that penalty is in fiscal terms, whereas prosecution can result in imprisonment. So therefore, for SSE, it is more beneficial if the Commissioner has exercised the option of penalty, whereas he would be more hardship is caused to him by the Commissioner invoking the prosecution provision. So therefore, this issue was raised. Now they said reading down is the concept now here used. These principles have given rise to rule of reading down the section if it becomes necessary to uphold the validity of the sections. In the present case, it is seen under section 44, before a prosecution can be launched, it is necessary that the SSE should have failed to pay the tax due within the time allowed without reasonable cause. The duty of the CST is therefore to be satisfied that SSE has failed without reasonable cause and without recourse to prosecution under section 46(1)(c), the tax due cannot be collected. The provisions of 22(4)(a) can be read as being applicable to cases in which the stringent step of prosecution is considered not necessary. So nothing is there in the Act. The Act has given two options to the Commissioner of Sales Tax. He can go for penalty or he can go for prosecution provision. But these provisions were read down. The court has added some conditions as to when the prosecution provision has to be invoked and when the penal provision has to be invoked. They said only in extreme circumstances where the commissioner is satisfied that unless you invoke that stringent option of prosecution, the recovery may not happen, then only the prosecution provision has to be invoked. Otherwise, in all cases, it is only the penalty provision that has to be invoked. Though there are two options available legitimately as per law to the Commissioner of Sales Tax. This is what is called reading down a particular provision. That is adding some extra element to the section already available in the Act, which we cannot do as a taxpayer. But the court also normally should not do, because the general principle is a casus omissus can be supplied only by way of an amendment, by legislative amendment. But only in extraordinary circumstances, the courts have interfered, and this is one of such cases under the Sales Tax Act. Reading the two provisions harmoniously, we are of the view that discretion is given to the CST to resort to one of the two remedies as the facts of the case may require. In graver cases, he will be justified in taking the drastic remedy and resorting to prosecution in the criminal court if he is satisfied that such a course is necessary for the collection of the tax expeditiously. If the discretion is not properly exercised, the court may be justified in interfering in such cases, but the law cannot be held to be invalid. So this is the principle. Now there is another situation. This was under the Income Tax Act only, but this particular section is no more there. 44 capital A capital C. This is applicable to Iraq dealers. Wherever there was purchase of Iraq from the government, so the provision said on the purchase price, 40% of the purchase price can be deemed to be the profits and gains of the business, and that profit can be subjected to tax. And this was without providing for any alternative to the SSC. You are all well aware of the presumptive taxation now, but the presumptive taxation comes with an option to the SSC to maintain books of account and show a lesser profit than the amount prescribed in the provision of the Act. And then the books of account may be scrutinized by the assessing officer, and the actual amount of profit will be ascertained by him, and they will be subjected to assessment. But this particular section 44 AC was coined in such a way that there was no such option made available to the SSC. It was straight away tax on 40% of the purchase price. And coupled with that, another section was there, section 206C, imposing, providing for collection of tax at source on the basis of that particular purchase price. Now, the issue was whether such presumptive income mandatorily forced on the SSC is valid or not. This was a decision by the Andhra Pradesh High Court, but later on that was approved by the Supreme Court. In such a situation, the court is left with two options. One is to strike down 44 AC, and the other is to read it down to make it consistent with the guarantees in Articles 14 and 19(1)(g). So considering the pros and cons of both courses and keeping in view the overall object of underlying the provisions, underlying the provisions and the language in 206C subsection 4, it would save the public interest more and further the intendment of the Parliament if the court read down the provisions of 44 AC instead of striking it down. So this was another situation where the court has intervened and applied the concept of reading down a provision. So how did they read it down? What they said is, once the tax is collected, the contractor cannot run away. Probably only in cases where the profit is far higher than 40% would he make himself scarce. In all other cases, he would come to the department for an assessment, and there is no reason why a regular assessment should not be made in his case. In other words, one would read section 44 AC as an adjunct to and as explanatory to sections 206C. On this construction, 44 AC does not dispense with section 48 to 43C absolutely. So the section uses the word notwithstanding anything contrary to contained in 28 to 43C. 28 to 43C provide for computation of profits and gains of business, where certain deductions are allowed to the SSC. But this particular section 44 AC said, notwithstanding anything contained in 28 to 43C, the profit of business will be deemed to be 40% of the purchase price. They said this is not how the particular section has to be read. The what it says, notwithstanding anything contained, is in the context of section 206C, because 206C considers deduction of tax at source, collection of tax at source on the basis of purchase price. Normally, tax can be collected at source only from income, not from the expenditure. Purchase is only an expenditure. So certain deductions are to be allowed thereafter while computing the profit. So all such mechanism is not required, and to this extent, the exclusion is applicable. 206C will be operative. 44AC, this particular exclusion is operative only to give strength to 206C, but independently, 44AC cannot be understood in a manner that the business profit has to be mandatorily computed at 40%. The SSC will be at liberty to file his return of income, show lesser profit, and his profit has to be assessed accordingly. This is what was the way in which the Supreme Court, Andhra Pradesh High Court has read down the provision. It so happened that subsequently 44AC was repealed. Another most important case,
Sir,
KP Varghese, I would suggest.
Hari, just take a break for 5 minutes,
Yes,
sir.
yes.
Continuously, you are speaking for 1 hour 40 minutes, I think. So just 2-3 minutes break we can take, sir. Okay, sir. As you wish. As you wish. Okay.
I'm not yet used to this Zoom meetings. So normally when we speak to an audience, we increase our pitch of the voice. So in fact, that is not required in a Zoom meeting, but so habits are very difficult to change our habits, old habits. So I would suggest each and every person to read this case completely. This is a very, very good case. The way a provision has to be interpreted, whatever external aids, internal aids. So there is a lot of discussion about interpretation of statutes in this particular case and also Dilip Kumar case. So both cases are worth reading once at least when it comes to understanding the interpretation of statutes. So now you are all familiar with section 50 capital C. Prior to this, earlier there was a section 52 subsection 2. More or less, it was in the very same lines of 50C. The section read as under, without prejudice to the provisions of subsection 1, if in the opinion of the ITO, the fair market value of a capital asset, here we refer to guideline value, here the word used is fair market value. Fair market value of a capital asset transferred by an SSC as on the date of transfer exceeds the full value of consideration declared by the transfer of such capital asset by an amount of not less than 15% of the value so declared, the full value of consideration for such capital asset shall, with the previous approval of IAC, be taken to its fair market value on the date of its transfer. We'll just briefly explain what it says is, in respect of a transaction of sale, if the actual consideration mentioned in the sale deed, if it falls short by more than 15% of the fair market value as per the assessing officer, then with the prior approval of IAC, he can substitute the fair market value in the place of the actual consideration. Now, the same provision we have in 50C. Here, now the margin is now originally 5%, now it is 10%. The comparison is between guideline value and the actual consideration. If the guideline value is more than the actual consideration, 50C will be invoked. But the basic difference is now 50C gives an opportunity to the SSC to rebut this presumption, and he can object to the proposal of the assessing officer to substitute the guideline value, in which case the assessing officer is bound to refer the matter to a valuation officer, and the valuation officer will value the property, and then the valuation made by the DVO or the SRO value, whichever is lower, will be adopted in the place of the sale consideration. This mechanism ensured that the provision was not struck down constitutionally. Which provision? 50C. Now we are only on 52.2. Here there was no such option provided to the SSC. All conditions are fixed in nature. There is one fair market value computed by the assessing officer. There is one sale proceeds as per the sale deed. The difference is more than 15%. Only requirement is approval of IAC, and SSC can be subjected to tax on the basis of the fair market value instead of the sale proceeds. So this has given rise to this particular controversy. Now, how to resolve this? There is nothing in the section that can enable the court of law to grant relief to the SSC. No possibility, because all conditions are very clear, crystal clear. There is no room for any escape from the clutches of this particular provision. But a genuine hardship was created because of this particular amendment, because many times what happens is you enter into an agreement on a particular date, the the negotiations are completed, you agree for a particular price, and some various for many different reasons there can be postponement of this particular transaction. The final registration of the sale deed may take place after 3 months, 4 months, sometimes even after 18 months or 24 months. Now the price has already been agreed to. So once the price has been agreed to at a particular point of time, now just because there is a postponement of registration and there is a time lapse, can we insist upon the buyer to compensate? May not be. Suppose the fault lies on your side. Suppose you have agreed that you have to get some approvals and then you will finally register the sale. Then if there is a delay on your part in getting the approval, you cannot insist the buyer to revise the sale price. So therefore, you will be compelled to sell that property at the price originally agreed upon. But once the sale deed is registered, for the consideration you have agreed upon 2 years back, certainly the fair market value as on the date of sale deed will be a higher amount and the provision will be attracted. And even though you are receiving a lesser amount, you will be subjected to pay tax on a higher amount. This is a genuine hardship caused to the SSCs. The unintentionally is what is the conclusion drawn by the Supreme Court. If it was an intentional hardship caused to the SSCs, the Supreme Court also could not have done anything. So to say that this is unintentional hardship, they had to look into they had to apply the Hayden rule, the Mischief Rule, which we will be discussing a little later, and the marginal loads to the section, the speech of the finance minister in the parliament, various aids to interpretation were considered before forming this opinion. And then the Supreme Court has read down this particular section. How they have read down? They said the section can be invoked, but the burden of proof is on the assessing officer, that the SSC has received actually an amount higher than that mentioned in the sale deed. So this is how the provision was read down by the Supreme Court. So naturally, the entire strength of the provision, was watered down, and the provision.
section 12AA అందులో ఒక క్లాజ్ ఇచ్చాడు.
Hari garu, kindly unmute yourself అండి. హరి గారు మీరు మ్యూట్ చేసేసుకున్నారు. అన్మ్యూట్ చేయండి. రైట్ మళ్ళీ బ్లాక్ అయిపోయింది.
Yes, sir. Now it is okay. Yeah, please.
It is okay, but meanwhile the screen size.
Yes.
సార్ కిందన జూమ్ ఉంది సార్, అక్కడ 158 నుంచి 100 చేసేసాను.
మళ్ళీయా?
జూమ్ రెడ్యూస్ చేయండి సార్, అక్కడ మీ కర్సర్ దగ్గరే. ఇట్ ఇస్ 158 అలా సార్. నో
ఇది
ఇట్ ఇస్
మీకు ఉపయోగపడదు కదా,
కొంచెం ప్లస్ సైడ్.
మీకు అనిపిస్తుందా మరి?
ఇంకా ఇప్పుడు 238 అయిపోయింది సార్. అది అంటే జస్ట్ ఇన్ ద మిడిల్ పెడితే
Right.
Yeah. Now okay, sir. Okay.
నాకేం ఇంకా పూర్తిగా అనిపించట్లేదు కదా ఇది.
అవునండి.
ఇది పల్లి దీన్ని పెంచాలి కదా, ఎక్కడ
ఇది
ఉంటుంది?
185 వచ్చేసింది సార్. 150 లో పెడితే కరెక్ట్.
అది కాదు, ఇందాక నాకు మొత్తం ఉంది, ఇక్కడ మొత్తం రావట్లేదు.
అదే మీరు మైనస్ ప్రెస్ చేయండి సార్. మైనస్ దగ్గర క్లిక్ చేస్తే 10 తగ్గుతూ ఉంటది. మైనస్ దగ్గర క్లిక్ చేయండి, స్టెప్ బై 10 స్టెప్ లో తగ్గుతుంది రిపీటెడ్ చేస్తే. అక్కడ మైనస్ అది కంటిన్యూస్ చేయండి, అది
సరిపోతుంది కదా ఇది.
అంటే కొంత కంటెంట్ హైడ్ అయిపోతుందండి. అంటే
నాకంతా కనిపిస్తున్నది.
నౌ ఓకే సార్. నౌ ఇట్ ఇస్ ఓకే. యా ఓకే.
So what the Supreme Court has said is that it is a well-recognized rule of construction that a statutory provision must be so construed if possible that absurdity and mischief may be avoided. There are many situations in which a purely literal construction would lead to wholly unreasonable result, which could never have been intended by the legislature. This is the most important thing. The intention of the legislature was never to create such a hardship. This is the finding of the Supreme Court, or the opinion formed by the Supreme Court. That is the reason why they have tried to read down this provision. It would indeed be most harsh and inequitable to tax the SSC on income that is received by him. It is difficult to conceive of any rational reason why legislatures should have thought it fit to impose liability to tax in the case of this nature. This is what they said. So the 52 would be read into it a condition that it would apply only where the consideration for the transfer is understated, and it would have no application in case of a bona fide transaction where the full value of the consideration for the transfer is correctly declared by the SSC. This is what they have finally held. Now, this is a case may not be exactly reading down, but a beneficial interpretation of the section was made in this particular case. Here what happened is SSC acquired a particular flat, and from the date of transfer, within 2 years, he has to acquire the flat if it is by way of purchase. Now the payments made within the expiry of 2 years period was very nominal amount. Major payments were made in the next 1 year. Now the court said after purchasing this flat, he got it constructed. He got it constructed through the builder, that is the developer. And for that, payments were made within the next 1 year. And for construction, you have time of 3 years. So therefore, what they said is construction does not mean you have to construct on your own by purchasing a site and then starting from foundation. You have got it constructed. It is not that way. Even if you construct it through a contractor with the help of a contractor or a third party, then also it amounts to construction only. So therefore, the payments made from after 2nd year, but before the completion of the 3rd year, shall also be taken into account. Where the plain literal expression of the statutory provision produces manifestly unjust result, which could never have been intended by the legislature, the court can modify the language to achieve the intention of the legislature and produce a rational construction. So this is where one of the important principle, which is known as Mischief Rule, also comes in handy. In fact, Mischief Rule was also taken into consideration by the Supreme Court in the case of KP Varghese. So what does this Mischief Rule says? Whenever an amendment is proposed in the Act, you have to see what was the provision prior to this particular amendment, and what was the mischief caused to the SSE because of the way in which a particular section is worded, and how the mischief is sought to be cured by making the amendment. And at the time of making the amendment, what was the reason stated? These are the 4 principles to be taken into consideration. And accordingly, the particular section has to be interpreted. This is what is called mischief rule. So for the purpose of mischief rule, this Supreme Court has referred to the speech of the finance minister. So an external aid was used by Supreme Court for interpreting the provisions of the statute. The speech made by the mover of the bill explaining the reason for introduction of the bill can certainly be referred to for the purpose of ascertaining the mischief sought to be remedied by the legislation and the object and purpose for which the legislation is enacted. This is in accord with the recent trend in jurisdiction, though not only in Western countries but also in India, that interpretation of a statute being an exercise in the ascertainment of meaning, everything which is logically relevant should be admissible. Then we have another principle that a special provision overrides the general provisions. To explain this, I have taken a very small example. This is section 153 dealing with the time limits for completion of assessments. 2 different time limits were provided, one for a regular assessment, one for an assessment, a reassessment consequent to issue of notice under section 148. Subsection 2 was with regard to reassessment. Different time limits were provided for regular assessment and reassessment. For reassessment, time limit starts from issue of notice under 148, whereas for regular return, the time limit will be a particular period specified from the end of the specific relevant assessment. Now here is a case where SSE did not file any return. Notice was issued to him under 148. Then he filed a return. It so happens that the return filed was within the time allowed under 139(4). So there is no bar in the act that notice under 148 cannot be issued prior to expiry of time limit under 139(4). So only 139(1) time limit is excluded. So thereafter 148 notice can be issued. So therefore, the issue arises whether the time limit applicable for the SSE would be that of a assessment, a regular assessment or a reassessment. The case of the SSE is he has filed a return under 139(4). That means within the time limit under 139(4), therefore the return should be construed as one filed in response to, under 139(4) and not as in response to section 148, and therefore the time limit for a regular assessment has to be applied. But the court said there are 2 provisions, one dealing with regular assessment, one dealing with reassessment. Reassessment is a special situation. So there is a specific provision dealing with reassessment. So when there is a specific provision and a general provision, the specific provision will prevail over the regular provision. The provisions of section 153(2) are special provisions and are applicable only in respect of proceedings under section 147. Whereas 153 is applicable in respect of assessments under 143 by 144, and therefore they are provisions of general nature. So the maxim generally a specialibus non-derogant has to be made applicable. Where special provisions exist, it will find its way in supersession of general provisions. I have not mentioned here, but this principle was applied also in respect of cooperative banks. A cooperative bank is also a cooperative society. So there was the issue of whether the deduction was to be made on the interest paid to its members or not. In that issue also, this particular principle was applied. Then there is another principle, rule of nociter associes. So here, the words have to be read in the context, which I have already mentioned. So here, the section considered was section 45. And the situation is, an asset is damaged in a fire accident, and there was an insurance claim received. So there is a capital asset, and there is some consideration received towards this capital asset, but there is no transfer in the normal understanding because there was no asset to be transferred. because you have taken an insurance policy, you are able to prefer or lodge a claim with the insurance company and you have received insurance claim. So therefore, the issue was whether this particular transaction can be subjected to tax or not. For this purpose, definition of transfer was taken into consideration. Transfer in relation to a capital asset includes sale, exchange, or relinquishment of the asset or extinguishment of any rights therein. I have already mentioned these are old provisions. There was subsequently an amendment. Now, even insurance claim received, such cases also capital gains will be applicable. But this was the old provision. What it says is transfer in relation to a capital asset includes, it's an inclusive definition, the sale, exchange, or relinquishment of the asset or extinguishment of any rights therein. So the case of the department is there is an extinguishment of right here because the asset was lost. So, and therefore it is to be construed as a transfer, and therefore section 45 is applicable, is what is the case of the department. But here the word extinguishment is to be read along with the transfer. That is the important aspect. The context in which this extinguishment was used is that it was while defining the word transfer. So transfer by way of extinguishment of any rights therein. That is how this particular section has to be read. Transfer by way of sale, transfer by way of exchange, transfer by way of relinquishment of asset, or transfer by way of extinguishment of any. This is how this particular section has to be read. You cannot ignore the other words with which this particular word is associated with. This is the principle that was applied by the Supreme Court. And said there is no transfer here. There is no way an asset can be transferred because asset itself is not existing. So since extinguishment of rights is not in connection with transfer, this particular words used in the section will not be of any help to the department, and hence this transaction cannot be subjected to tax. That is how the principle was explained by the Supreme Court. Now, as I have been mentioning just now, apart from the provisions of the Act, the rules, the circulars and notifications, and also the judicial pronouncements, external aids are also taken as for the purpose of interpretation. The legislative history, particularly when you want to apply the mischief rule, the section as it stood prior to the amendment is very, very relevant. So legislative history, subsequent amendment, sometimes amendment is made to address a particular situation. Now the case presently, the hot topic is employees' contribution to PF and ESA. Now the section 43B also has been amended, and it has been clearly mentioned, clarified that section 43B, whatever relief SSC gets by making payment before the due date of filing the return of income, that won't be applicable in respect of employee contribution to PF and ESA. Those payments have to be necessarily made within the specified due dates under the respective legislations, and the allowance cannot be made claimed just because the amount was subsequently paid within the due date of filing the return. But this amendment is a subsequent amendment. So now the tribunals have started interpreting, saying that there was an omission in the Act. Now this omission is now supplied by the Act. So therefore, it has to be prospective in nature. It cannot be retrospective in nature. This is the line of decisions now coming forth from the various tribunals. The matter is yet to be decided by any high court. So subsequent amendment also is important. Committee reports. In one of the subsequent examples, this committee report also is taken into consideration, that is Vanchu committee report. FM speech and discussion in the parliament. I have already referred to KP Varghese case. Explanatory memorandum. This was also taken into consideration in the subsequent example. Statement of objects and reasons. So like this, there are external aids of interpretation. Now internal aids of interpretation. Marginal notes to a section, explanation to the section, preamble of the section, long title of a legislation, non-obstant a clause, proviso. All these things together, they have to be taken into consideration for the purpose of interpreting a particular section. Then comes interchangeability of may and shall. Our chairman has covered this particular issue in his initial address. The word shall can be read as may and the word may as shall. Normally, our understanding is may means a discretion. Shall means mandatory. May is directory. Shall is mandatory. But the words can be used interchangeably. This is one of the cases of AP High Court. There are many decisions. This was a case readily available to me, so I have picked up this one. This was in the context of 158 BFA 2 penalty. It was in the context of a block assessment. So the wording used is the assessing officer may direct that a person shall pay by way of penalty. So this is where the return is furnished after the expiry of the notice time limit specified under 158 BC. If 158 BC notice is issued, some time limit is given, return is filed after the date. If the SSC discloses any undisclosed income in that, or even if the assessing officer assesses some undisclosed income, then apart from the tax and the interest payable, the penalty also has to be levied. But the wording used is interestingly may direct that a person shall pay by way of penalty. So both the words may and shall are there, but shall pay by way of penalty is normally given stress by the department. They say that because the word used is shall, therefore penalty is mandatory in these cases. There is no way SSC can escape from the provisions of this particular section. But interestingly, with regard to interest, in the very same section, it is mentioned that SSC shall be liable to pay simple interest. SSC shall be liable to pay simple interest. Here there is no word use of word may. Whereas here there is may direct that a person shall pay by way of penalty. Now AP High Court has picked up this aspect. The other high courts have rendered the decision, but not on this particular principle. They mostly dwelt upon the concept of may and shall, and they said shall here should be read as may. But AP High Court, apart from agreeing with those decisions, it has also picked up this particular distinction. And they said in the very same section, may is used once and shall also used once. For interest, shall was used, for penalty, may direct was used. So therefore, may here also to be taken into consideration. And therefore, shall levy by way of penalty does not mean a mandatory penalty. And there is a discretion to the assessing officer to not to levy the penalty. So no doubt the words shall may at times be construed as directory and the word may be construed as mandatory as the context warrants. So, prospective and retrospective amendment, the general rule normally is that a substantive amendment is normally prospective in nature and a procedural amendment is applicable to all pending assessment. An amendment is considered as substantive when it is altering or affecting the rights of a taxpayer with regard to his tax liability. That means normally there will be a new incidence of tax on him or an incidence of tax at a higher rate in respect of an income which is already taxable before even this particular amendment. So these are all the various situations we can say that there is a substantive amendment brought in by the statute. So whenever a substantive amendment is brought in, it should be considered as prospective in nature, and only when a procedural amendment is brought in, it is applicable to all pending assessments. But sometimes an amendment may be clarificatory in nature and it cuts across both ways. It can be clarifying a beneficial situation to the SC, or sometimes it may be clarifying an adverse situation to the SSC. But if it is only a clarificatory amendment, then it can be also treated as a retrospective amendment, even if it is a substantive amendment. But because when the word clarificatory is used, that means the incidence of tax is already there. Now they are only trying to clarify the position. So then it is called clarificatory amendment. So therefore, it is a kind of exception to the main rule. Now, circulars and notifications issued by the CBDT are binding on all the officers of the department. However, a circular prejudicial to the interest of SSC and contrary to the main provisions of the Act can be ignored by the applied authorities. So it's a very useful proposition. Whenever there is a CBDT circular, if it is even in conflict with the provisions of the Act, but if it is beneficial to the SSC, certainly that circular will be binding on the assessing officer. But if the circular, even if it is circular when it is against the interest of the SSC and only trying to explain the provisions of the statute, then the courts can ignore that particular circular and independently interpret the particular section with the help of various aids of interpretation and the rules of interpretation, which we have already discussed till now. Now, this principle was explained in KP Varghese case. That is why I'm telling KP Varghese case is a very, very useful case where many principles of interpretation were referred to and discussed by them. Now, coming to the next item in my original list, that is judicial pronouncements. So the judicial pronouncement is also a part of income tax law. When we say income tax law, it is including judicial pronouncements. So the law laid down by Supreme Court is binding for everyone to whom the IT Act applies. Article 141 of the Constitution of India provides that the law declared by Supreme Court should be binding on all courts in India. Now, in case of conflict between decisions of Supreme Court, the decision of a larger bench shall be followed. If there is a decision of 2-member bench, then there is a subsequent decision of 3-member bench, or maybe 2-member bench. There was already a 3-member bench which was ignored, overlooked, and they have passed a judgment. We have to always take into consideration the decision of the larger bench. It always prevails over the decision of a smaller bench. Then bench between two decisions of benches of equal strength, the later decision will prevail. So if there is a 2-member decision once initially rendered, if there is a subsequent 2-member decision, then the subsequent decision will be taken as the one that should have a binding force. Same principle applies for even High Court decisions. Now, likewise, the High Court decision is binding in that particular state. Suppose Andhra Pradesh High Court renders a decision within the state of Andhra Pradesh, this High Court decision is binding. Now, the situation is, suppose there is no other decision, but there is a decision of a Kerala High Court, whether to be followed by the assessing officer or not. Normally, the assessing officers are not following, but actually the judicial opinion is that only when there is only one High Court decision, that has to be followed. But if there are two or different views, maybe some high courts in favor and some high courts against, then the view favorable to the SSC has to be taken into consideration. The most important point is dismissal of SLP by the Supreme Court cannot be equated to law laid down by the Supreme Court. Sometimes what happens, see, there is no provision in the Income Tax Act which allows the department to automatically escalate a matter from High Court to the Supreme Court. The Supreme Court has to grant the leave. They should say that, yes, there is some substantial question involved in this particular case, which requires intervention of the Supreme Court. Then only the case will be taken up for hearing. It will be converted into a civil appeal and the hearing will be taken up. So most of the time, the application for the leave of grant, which is special leave petition, it is called. At this stage itself, Supreme Court dismisses. It says there is no case for admission of SLP. So if an SLP is dismissed, that does not amount to pronouncement of law by the Supreme Court. It only remains as the decision of the High Court. But if the Supreme Court admits the SLP and dismisses the appeal of the department or that of the SSC, even within a one line, saying that we don't find any merit in the arguments, the appeal is dismissed. One sentence only. Still, it is pronouncement of law because the doctrine of merger applies. Whatever High Court has decided, the same thing will now become the decision of the Supreme Court. You have to read the High Court judgment itself as the decision rendered by the Supreme Court. So this is the subtle difference between a one-line order and a dismissal of a SLP. Then amendment by the Finance Act. Now we are all aware that every Finance Act we normally have an amendment. Most of the time amendments are made applicable with effect from the first day of the assessment year, because the rule of the charging provision, section 4, what it says is income of a previous year is subjected to tax as per the law prevailing at the beginning of the assessment year. So therefore, most of the amendments, unless they want to make it express it otherwise, they are all made with effect from the beginning of the assessment year. In this context, an interesting situation arises. This was a case recently decided by the Honorable Supreme Court in the case of Sri Chaudhary Transport Company. So this is in the context of RTA-IA. The Finance Number Act 2004 brought into effect the provisions of RTA-IA and any failure to deduct tax at source will invite a disallowance under 40A IA of the Act. Now, the provisions were made effective from 1/4/2005. That is the beginning of the assessment year 2005-2006. So normally, as per Section 4 of the Income Tax Act, from April 2004 to 31st March 2005, this is the previous year. Income of this previous year is subject to tax as per the law prevailing at the beginning of the assessment year 2005-06. Now 40A IA is made applicable from 1/4/2005. So therefore, all transactions of the previous year, 1/4/2004 to 31st March 2005, Section 40A IA will be applicable. But here the important point is the Finance Number 2 Act 2004 received the assent of the President on 10/9/2004. 10/9/2004, from 1st April 2004 to 9/9/2004, almost 5 months, 9 days have elapsed. Now, during this particular period, the old provisions will apply. The amendment is of no relevance. SSC cannot even foresee that there will be an amendment brought in by Finance Act number 2004. So now what happens to the transactions that have taken place from April to 10th September 2004? Because there might have been so many payments made to contractors without deduction of tax at source, without knowing that there is a possibility of a disallowance under 40A IA. Normally, what common sense suggests to us is that these transactions should be excluded, because SSC could never have contemplated that this amendment is going to come. But interestingly, the Supreme Court decided the other way. They said Section 4 is very clear. It is a charging section. What it says is income of a previous year is subject to tax as per the law applicable or law in force at the beginning of the assessment year. So therefore, the entire previous year transactions are hit by 40A IA. Now, it is in this context that many a times I say that if facts are very weak, facts are not strong, we should restrict ourselves from escalating the matters to higher forums. Here, to save their skin, they have escalated the matter to higher forums, but this has affected largely the interests of all the taxpayers in the country, because had it been a different case with a stronger facts, the Supreme Court might have decided the other way also. We would see subsequently what are those distinguishing facts in this case. But the law laid down is very simple. Law laid down is Section 4 is taken into consideration. Law applicable at the beginning of the assessment year is applicable to the entire previous year. That is the I have not mentioned here the specific facts of the case, but I will briefly explain. The reasoning given by the Supreme Court is that there was a provision already under the Act, under Section 2011. SSC can be considered as an SSC in default if he fails to deduct tax at source. And on that amount, interest can be collected under 2011(1)(a). And there are also provisions for prosecution. And there is a penalty also, 271(c). Now the argument of the SSC is that I was not knowing 40A IA will be introduced, therefore I have not deducted tax at source. The Supreme Court found fault with the argument of the SSC, saying there are so many other provisions which impose an obligation on the SSC to deduct tax at source. In spite of so many provisions in the Act, they have not complied with the provisions of the Act. So therefore, you cannot say that only had there been a section 40A IA, I would have complied with this provision. Just because 40A IA is not there, I have not complied with the provisions, is no argument at all. This is the most important fact that has resulted in the Supreme Court taking a completely different view. And another issue also, whether 30% rate of taxation introduced subsequently in the Section 43B, it is prospective or retrospective. That issue also unfortunately decided against us because of this particular case. All this happened because of very weak facts in the case. SSC not only failed, subsequently also he did not pay the amount even after the completion of the financial year. And it was a complete default on the part of the SSC. He was only trying to fight his case before the forums of law, but not willing to comply with the provisions of the Act. This attitude of the SSC was found fault with, and a very harsh decision was taken by the Supreme Court, maybe within the four corners of the law and by interpreting the provisions of Section 4 of the Income Tax Act. But now this issue may be relevant even for us in another way, that the Income Tax Amendment, Taxation Laws Amendment, Second Amendment Act was introduced with effect from 15 December 2016, increasing the rate of taxation from 30% to 60% plus also surcharge of 25% in respect of unexplained cash deposits, wherein 115 BBE will be invoked by the assessing officer. Now, the cash deposits made from April 2016 to 14th December 2016, what happens? Because SSC knows that his tax rate is only 30%. Now you say tax rate is 75%, including surcharge. So it substantially altered the rights of the SSC with regard to tax liability. Now, whether this amendment can be made applicable to transactions prior to 15 December 2016, normally it would have been a cakewalk, but because of the Chaudhary transportation, it will be very difficult for the SSCs to get over with their argument. Now, the last case I would like to discuss is that of Gold Coin Health. It's a very interesting case. It is with regard to, again, prospectivity and retrospectivity of an amendment. It is in respect of explanation 4A introduced by the Finance Act 2002. There was originally an explanation 4A inserted by Finance Act 74. Then it was further amended and a new modified section was, there was an amendment to 4A by Finance Act 2002. All this was done by the department to address one single argument of the SSC, that if SSC files a return of loss and assessing officer makes some additions, which has only the effect of further reducing the loss to another amount of loss. You file a return for a loss of 1 crore, additions are made for 30 lakhs, still the assessed income is only a loss of 70 lakhs. Now, whether penalty under 271(1)(c) can be levied in such a situation or not, this is the single issue that was to be addressed by the government. And for this purpose, initially they have brought in an amendment by way of explanation 4A. They said, in any case where the amount of income in respect of which particulars have been concealed or inaccurate particulars have been furnished exceeds the total income assessed, means the tax that would have been chargeable on the income in respect of which particulars have been concealed or inaccurate particulars have been furnished, had such income been the total income. This was the original section. So it does not, it says if there is an addition made, then that addition will be treated as the amount of the addition will be treated as the amount of concealment. Now, this provision was explained in the memorandum. So what they say is, in a case, however, where on setting of the concealed income against any loss incurred by the SSC under the head of income are brought forward from earlier years, the total income is reduced to a figure lower than the concealed income or even to a minus figure, the tax sought to be avoided will mean the tax chargeable on the concealed income as if it were the total income. This is the explanation they have given. So they said, now suppose income assessed is 50 lakhs, income returned is 20 lakhs, total addition made is 30 lakhs, but there are carry forward losses of 50 lakhs. Now 50 lakhs set off against this income of 50 lakhs, income became nil. Now whether there is any concealment or not, that is the situation they wanted to explain in this memorandum. So therefore, the courts have again held that where loss is reduced to loss, then it won't be taxable. Then there is a Vanchu committee report also that was subsequently issued, and amendment was again made to section 271(1)(c) by way of an explanation. Here they said effect of reducing the loss is the LOSS, loss declared in the return or converting that loss into income, means the tax that would have been chargeable on the income in respect of which particulars have been concealed or inaccurate particulars have been furnished. So here they have addressed the issue. Even if a loss is reduced further to a loss, that situation is now covered by Finance Act 2002. Now the issue is whether this amendment by way of explanation is prospective or retrospective in nature. The Supreme Court said initially there was a case of virtual software where they said the amendment is prospective in nature. It cannot be made applicable prior to insertion of this explanation. But then it was referred to a larger bench, and in gold coin wood case, the Supreme Court said after considering the amendment, after considering the memorandum explaining the amendment, and also considering the Vanchu committee report, they said the explanation is only clarificatory in nature. The right from inception, right from 1/4/1962, you have to always read 271(1)(c) in such a manner that if the loss is reduced to loss, then it is also amounts to concealment only. So therefore, this explanation 4A cannot in any way be considered as a prospective in nature. So this is a very interesting decision where according to SSC, it substantially affects its rights. But according to the Supreme Court, it is only a clarificatory amendment. And once the amendment is considered as clarificatory in nature, then it will have a retrospective effect. To appreciate that particular principle, this particular case law would be necessary. Need not necessarily be the loss of the very interesting point they have picked up. What they said is the income can become a loss even on account of set-off of carry forward losses. Now, set-off of carry forward loss, the loss originates in some year. It can be 15 years back, it can be 14 years, some subject to time limits. If it is depreciation, there is no time limit. If it is otherwise, it is 8 years, some time limits. But loss relates to every year. So picking up that particular point, they said the law applicable at the beginning of the assessment year does not mean this particular assessment year, because the losses relate to earlier assessment year. So therefore, the amendment has to be read as retrospective in nature. Once they decide that a particular issue is to be decided in a particular way, they will somehow try to find out some reasoning and justify their decision. So that is why facts are always important. Facts should convince the court that it is a fit case for relief. Once they are convinced that it is a fit case for relief, they may go to the extent of even reading down a provision and granting the relief. But if they are not convinced, they will interpret even a plainly worded section also against you, and then they will decide against you. So these are all the instances that I have taken up for the purpose of explaining the principles of interpretation and how to read the provisions of the Income Tax Act. No doubt I have missed out certain things like ratio decidendi and some other things that our chairman has initially mentioned. Ius dim generis, that also I could not discuss. So certain things that I could not discuss for want of time. For want of time, not only here, because you may be willing to listen for another half an hour, but my preparation also, because of I could not get enough time to prepare myself. But I think 2.5 hours is fairly reasonable time, and beyond this, the absorption capacities also will be affected. So on some other occasion, we will try to discuss the other issues. But still, if there are any, I don't think interpretation of statutes, anybody will have any doubts. But still, if there are any doubts, let us certainly try to resolve. And I thank you each and everyone for attending this Zoom meeting and listening patiently to my presentation. Thank you.
Thank you very much, G.V.N.Hari garu, for your elaborate and detailed presentation and for your time and effort for the branch members. It shows your love and affection towards the branch and its members to address whenever we request to take up a session, sir. Really, we had a nice session. Now I request members to unmute yourself and you can pose your questions or you can put it in the chat box to the speaker. So he is ready to answer the queries. Members, unmute yourself and you can ask the question directly.
If anybody wants to supplement anything, that also is welcome, not necessarily in the form of a doubt. Any knowledge sharing is welcome.
సార్ ఎంవి శర్మ సార్
చెప్పండి శర్మ గారు.
ఏం లేదు జస్ట్ ఫర్ అకాడమిక్ ఇంట్రెస్ట్ డిఫరెన్షియేట్ బిట్వీన్ సబ్స్టాంటివ్ లా అండ్ ప్రొసీజరల్ లా విత్ రెఫరెన్స్ టు సెక్షన్స్ బికాస్ ఏ vested right is having in the substantive law by to litigant, but in the procedural law a litigant don't have that vested right annadu. Somewhere I read it in one case. So just throw some light on this. What is the substantive law and what is the procedural law?
See,
For the-
substantive, yes, substantive law, as I already explained, in fact, that it substantially alters the rights of a particular taxpayer with regard to his incidence of tax. Now, incidence of tax can be in many ways. Tax includes interest, cess, surcharge, penalty. Therefore, it can be that there is a provision that taxes a particular income at 30%. Then it is increased to 60%. It's a substantial amendment. There was no provision to disallow a particular expenditure if tax is not deducted at source. But a new provision has been introduced. So it substantially affects the rights of the person because by way of a new taxation. So like this, a penalty was earlier not there for delay in filing the return of income. Thereafter, a penalty is imposed. A penalty section is introduced. So these are all the situations where it substantially alters the rights of a person with regards to a particular incidence of tax. So these are called substantive amendments. Any amendment to a section which has the effect of increasing the incidence of tax or introducing a fresh incidence of tax, these are substantive amendments. Procedural law, any procedural law any amendment, it normally applies to all pending assessments. But now the burning topic is section 148. It's a procedural law. So now
Yes,
the new section has been brought in, but the notices are issued as per the old provisions.
Lot of
Normally procedural law means it applies to all pending assessments. Once a notice is issued after this particular date, it has to comply with the old provisions, new provisions. But they are issuing notices on the basis of the old provisions. So this is an interesting situation.
Thank you, sir.
Any other members has any queries?
Hari garu, good evening, sir.
Good evening.
నరసింహ గారు చెప్పండి. మీరు వీడియో కూడా ఆన్ చేయండి సార్.
పర్లేదు వీడియో ఆన్ చేయడానికి అవ్వదు.
డ్రెస్ కోడ్ లో లేరు ఆయన. అదే
ఎగ్జాక్ట్లీ ఇంటర్ప్రిటేషన్ ఈస్ కరెక్ట్. ఏలా సార్, అగ్రిమెంట్ ఫర్ సేల్ రిజిస్ట్రేషన్, if it is paid full consideration at the time of transfer of property after construction of the flat, is the 50C or 56 both the in point of the seller as well as the buyer? Is there any problem?
You mean to say
Sir,
there is a
at the time of sale agreement registration, full consideration was paid.
Okay. Transfer possession was given or not?
Possession was not given. Possession will be given after completion of the project. That it will
Okay.
take another 3-4 years.
Okay.
And there is no consideration will be paid because the clause is already mentioned in the agreement for sale that the full consideration was paid. No liability will be there.
Account pay check or cash?
Through account pay check. Everything was paid through account pay check only. And
Then there
in
is
point
a
of buyer,
there is a provision of both in section 50C of the Act and also 56 to 10 of the Act.
56.
The provision will be useful to the SSC, and the increase in value will be ignored.
Increasing value will be more than 10%. Actually,
That is what that increase in value during this 3 years period will be ignored. The comparison will be made on the date of agreement.
Okay, sir. Thank you, sir. Thank you. Because nowadays this gated community things we are coming, and the construction will takes place 3 to 5 years or 6 years, even more also. So in the point of the seller, at the point of the buyer, and both the things, it is a source of income for him, is a capital gain. That's why I'm asked this question. Okay, sir. Thank you.
Any other member, please? Hari, your elaborate presentation seems that it has cleared all the doubts in the minds of delegates.
Could be,
There's
or
no
it could be the other way. It could
No,
be the
no.
other way. I agree that the topic is very dry, actually, a dry topic, but I tried to keep it as interesting as possible.
Yes, sir. Really, you have covered many case laws with reference to the provisions, all these words and phrases are used in the law.
Yes.
Yes. Yeah. Hope there are no more queries from the members. So I request the Secretary of the branch, C.A. Prashant Kumar, to propose vote of thanks.
Respected Chairman, CA S. Murali Krishna Garu, Land Speaker and Senior Member, CA G.V.N.Hari Garu, Senior Members and other dignitaries, good evening to all. I am privileged to propose vote of thanks for the first day session in the weekdays webinar on my own behalf and behalf of Visakhapatnam members. Sir, I convey my sincere thanks from the bottom of the heart for accepting our invitation, being with us to share your knowledge and experience in spite of your busy schedule, sir. Sir, your experience and deliberations from the basics of interpretation and understanding the IT Act with the decided case laws are really given insight, enlightenment to our members, sir. Sir, you are said, as you said that at the beginning, that you have not prepared the presentation. But in your entire presentation, we never felt like that, sir. Sir, the way of your explanation regarding interpretation of law and case laws are immensely well. Sir, thank you very much for your uninterrupted, delightful deliberation, sir. Even you are not taken a single break. Without that, you had given a long session. Thank you very much, sir. Members, tomorrow we have a session at 5 p.m. and the topic is comparative analysis of parallel tax regime. And speaker is CA E.R. Swamyajali Garu from Vijayanagaram. I request all the members, please join and get benefited out of it. Thank you, one and all.
Hari Garu, request to you to share the Word document you have prepared. So
It is what actually it's a rough document I have prepared. I will try
but
to.
It doesn't seem like rough document. It contains very much useful information. Actually, some of our members called in the middle of the session for your this thing. That Word document, if you can share it, will circulate to members.
I don't mind sharing it, but my request is don't circulate it in my name anywhere. Because if any mistakes are there, grammatical mistakes or anything mistaken, I have not revised it in that particular perspective. So I made it for my own purpose, actually. So still,
in such case, whoever asked typically, you share to them, that's it, without mentioning anything and all.
True.
Okay, sir. Whoever are interested and whoever are asking, we will circulate to them and we will.
Big request only, just you send. just to have that list of plus Hari garu
Yes, sir, you
referred
have
in the
covered
write-up.
elaborately all the case laws, sir, interpreting the phrases and words like that.
Ah,
Yes, sir.
Some
Sure,
of
sir.
A good
Man
suggestion, Sharma garu, good suggestion. From my
Avunu, sir.
side, I once again thank Institute for giving me this opportunity, and more than anything else, the thanks should go to the members actually, because listening continuously for 2.5 hours is it's an onerous task. And,
Sir, though you
therefore,
say it is a dry subject, almost 90 members attended, sir, this webinar. So really, this is not a dry subject. It proves that it's not a dry subject, an interesting and knowledge-based topic, we can say, sir.
Hari garu,
చెప్పండి శర్మ గారు.
మీ వాయిస్ లో సరస్వతి దేవి అలా ప్రవహిస్తుంది సార్. అలా ఆ సంగీతం కింద ఉంటుంది. యాక్చువల్ గా ఎక్స్టంపోకి వెళ్ళిపోయి నేను వీ హావ్ బిన్ అబ్జర్వింగ్ సమ్ ఆఫ్ ది స్పీకర్స్ ఇలా వెనక్కి పడుకుని ముందుకు పడుకుని చేతులు మొత్తం నాట్యం చేసేస్తున్నారు మీటింగ్ చెప్పేటప్పుడు వెబినార్ లో, బికాస్ దే ఆర్ సిట్టింగ్ అట్ దేర్ ఆఫీసెస్. మీరు చెప్పేటప్పుడు ఎలా అందువల్ల 2.5 గంటలు కాదు, మీరు ఇంకో 2.5 గంటలు చెప్పినా కూడా వింటాం. మన ఓన్ మెంబర్ విత్ హ్యావింగ్ లాట్ ఆఫ్ ఎక్స్పీరియన్స్ ఎక్స్పోజర్, దట్ టు చాలా ల్యూసిడ్ స్టైల్. యువర్ స్టైల్ ఇస్ వెరీ ల్యూసిడ్ అండ్ చాలా చిన్న పిల్లాడికి కూడా మొన్నే ప్రాక్టీస్ పెట్టినాడికి కూడా అర్థం అవుతుంది.
Thank you very much.
బాగుంటుంది. అందువల్ల ఎవరు అడిగారంటే ఖచ్చితంగా మీరు కేపీ కదా, సో వాళ్ళు దే మే హావ్ దట్ నోట్స్ టు రికార్డ్
అలాగే
ఇమీడియట్లీ.
తప్పకుండా.
ఆ రెఫరెన్స్ కింద చదువుకుని వాళ్ళు దే విల్ బి బెనిఫిటెడ్ బై గోయింగ్ త్రూ దెమ్.
అలాగే
చాలా బాగుంది. మీరు ట్రై అన్నారు కానీ చాలా మందికి తెలియదు ఇవి.
అంటే
మనం ఏదో డౌట్ గూగుల్కి వెళ్ళిపోవడం,
నేను
సెర్చ్ చేసుకోవడం.
సిఏ పరీక్షలు రాసినప్పుడు చాలా కష్టంగా ఉండేది నాకు ఈ సబ్జెక్ట్. యూజస్డియం జనరల్స్ తప్ప ఇంకేం అర్థమైతే వచ్చాయి కదా.
మిస్చీఫ్ రూల్ ఎక్సలెంట్ గా చెప్పారు మీరు. మిస్చీఫ్ రూల్ తెలియదు. మిస్చీఫ్ రూల్ అంటే మామూలుగా చదివితే తెలియదు. బికాస్ స్టడీడ్ దీస్ 4 పాయింట్స్ అనగానే వెంటనే చదువుతాడు. ఇంటికి వెళ్ళి రేపు ఓపెన్ చేస్తాను. మీరు చెప్పారు కేపీ వరకు చదవండి, బెటర్ అనగా దీస్ ఫర్ ది నెక్స్ట్ జనరేషన్ సార్. దీస్ నాట్ సీనియర్ మెంబర్స్. అయిపోయాను నేను అదే చెప్పాను. వాట్ ఎవర్ ప్రోగ్రామ్ యూ కన్సీవ్ కీపింగ్ ఇన్ మైండ్ ఆఫ్ ది నెక్స్ట్ జనరేషన్. సరదాగా సో మీతోటి 6 రోజుల కార్యక్రమాన్ని ఓపెనింగ్ మీతో చేద్దామని అనుకున్నాను.
శుభారంభం, మీతో శుభారంభం. Thank you very much, Hari garu, for your valuable time and efforts. Thank you.
Thank you, sir.